Good afternoon, ladies and gentlemen, and welcome to CL Educate Limited's Q3 FY2026 analyst call. My name is Arjun Wadhwa. I'm the Group CFO of CL, and I'll be your host today. Welcome once again to our metaverse platform called Vosmos, which we have been using ever since the COVID years for our analyst call. This call, as always, will be recorded, transcribed, and made available in the investor zone on our website within the next 24 to 48 hours. Should you have any questions, please type them in the chat box in the bottom right-hand corner of your screen, and we will address them at the end of the session. Joining me on this conference call today are Mr. Satyanarayanan. He's the founder and chairman of CL Educate. Mr. Gautam Puri, co-founder, vice chairman, and managing director. Gautam takes direct reporting of the EdTech business, which includes our test prep, publishing, and student outreach businesses. And Mr. Nikhil Mahajan, he's our group CEO and executive director, who also anchors the MarTech business. I'll start the session with a few finance updates and then walk you through a little bit of an update on the DEX business before handing over to Gautam and Nikhil on their respective businesses, with Satya then closing with a few corporate updates. I'm on slide 10 of the presentation that we shared. It should be visible on your screens right now. Happy to share that our total revenue from a 9-month perspective has grown from 266 crores to 445 crores, which is a 67% growth on a year-on-year basis. A large part of this growth has obviously come from the addition of the DEX business, which wasn't there for the first 9 months of last year. It has contributed 194 crores to our top line. The corresponding DEX business during this time last year was 173 crores. So we've grown about 20 crores from a DEX to DEX perspective. Our EdTech business is down by about a similar amount, 150 crores versus 127 crores this year. And our MarTech business is up from 116 crores to about 124 crores. From an EBITDA perspective, we had reported an EBITDA of 27 crores approximately last year, and we are up 120% to almost 59 crores from a 9-month perspective this year. From a PAT perspective, we were at 4.4 crores last year. We are at minus 16 crores this year. But as all of you are aware, a large part of the PAT fall comes on account of a significant increase in the finance cost and in the depreciation, which has come from the addition of the DEX business, of which it's important for you to understand that the total finance cost, which has grown from 2 crores last year to nearly 40 crores this year, actual interest cost of that contributes only about 21 crores, and the remaining amount is an Ind AS entry. And similarly, from a depreciation perspective also, almost 9-10 crores of the amount comes on account of Ind AS entries. So the total Ind AS impact on the financials this year from a 9-month perspective is in excess of 28 crores. And there is also an additional impact this year on account of the labor codes that have been introduced by the government of India to the tune of about 5.5 crores. So if I net my minus 16 crores for this 33 crore impact, my PAT would have actually grown from about 4.5 crores to about 17 crores. So from a business to business perspective, the growth is there both from a revenue perspective and from an EBITDA perspective. The PAT is obviously impacted by the debt that we have taken, about 210 crores at the start of the year for the DEX acquisition. And the actual interest impact of that is only about 21. The remaining impact, as I would wish to reiterate, 28 crores of what you see from a P&L perspective impacting the PAT comes on account of Ind AS. Moving forward, I'll just give you a quick update on the DEX business. The DEX revenue, as I already shared, has grown from about 174 to about 194. and Dex's specific EBITDA contribution has grown from about 34 crores to 42 crores. Happy to share as well that post the acquisition and moving from an NSC brand company to Dexit Global, which is what the company is now called, we have had 100% rollover of clients. We had one client remaining to roll over when we had done this, our last investor call. That client rollover has also happened. It was our most critical client, IRDA, which I'm happy to share has agreed a new 3-year deal with us at a substantially increased price as well. The business, as I said, has grown about 12%. Margins have also improved by about 300 basis points over what they were last year. And in terms of what we're looking at in terms of delivery this year, we're going to do about close to 70 lakh exam counts, with about 25 lakh of those coming across our accreditation business, and about 45 lakhs coming from our recruitment and entrance exam business. In addition to the rollover of accounts that we've had, which were our annuity business accounts, we've also added new segments by entering the university business. We've had addition of clients like IIM Bangalore for their executive education program, Ashoka University. Measure Learning is another new client we've added this year. And we've also generated new business through the addition of new accounts like CCRAS, which is the Ayush Ministry, DGAFMS, which is the Armed Forces, and NACIN and the Microfinance Institute, among others, in terms of new business generated this year. Moving forward, I'd like to request Gautam to give a brief update on the EdTech business.
Yeah, good afternoon, everyone. Arjun, am I audible?
Yes, go ahead, please.
Thank you. Okay, as Arjun has already given the numbers that the in the EdTech business, we are down from 150 to 127 crores. The issue here, as I've been saying for the last 3 or 4 quarters, is a structural change which is happening in the market, with stones shifting more towards low value products and a greater propensity to look at self-prep also. The good news, however, is that we are by and large holding on to our numbers, and a couple of programs, especially BBIPM, seem to be doing better. We're better in terms of numbers, and while the base is small, we see BBIPM becoming a bigger item as we go along. MBA, again, there's a small thing that the paper was slightly difficult, and normally a difficult paper leads to higher amount of coaching. But I will not look too much into it. By and large, yes, there's a positive news. But I still think, despite this positive news, we are in for some kind of a structural shift, especially in the graduate segment, and the difficult period is likely to continue for another 2 to 4 quarters. Yeah. Law has by and large been steady, and CUET has not performed as we wanted to initially because of various issues pertaining to the unpredictability of the paper and it not getting the traction it needed from university admission point of view. The university admission, the platform monetization that we do, allowing colleges and universities to reach out to our students, is doing fairly well, and that's a business that is likely to grow by about 10%. Okay. Publishing, again, still is doing reasonably well, and our author-led series, wide label sales, etc., by and large continue to exhibit growth. Yeah. As far as the market is concerned, coming back to the structural shift that I was talking about, as far as this market is concerned, we are looking at we have experimented with a couple of things, and we will be experimenting with a couple of new variants as we go along. One of the things that we are looking at is to try and break the walls between the offline and online modes of coaching. The advantage that we have is that we are present in about 120 cities. So an online student can definitely look at getting support from us, in wherever he or she is based. Similarly, an offline student, when he or she needs, should be able to go online. So we are trying to work out a way in which we are able to break this barrier between online and offline, which can become a distinctive competitive advantage for us. One small experiment we had done in the last season in Delhi was AFA, which says attend from anywhere, and has been fairly successful, and the word of mouth about it is positive. Similarly, if you look at the other parts, our shift towards the smaller products, the 1000 series, all about or for test series, all of them have been received well, and in terms of numbers, we have grown significantly in these domains. Okay. Other things, obviously, AI is the buzzword, but yes, we are trying to see how we can incorporate it in our academic support, especially from a doubt solving perspective and the support that student needs 24 hours, 24 by 7. We are also looking at expanding into schools, so institutional partnerships. A couple of pilots are on, and hopefully we'll be able to give some good news in the next 1 or 2 quarters. Okay. One of the areas which has again created a good positive word of mouth for us is that via DEX we have been able to give students a live experience, an experience of the actual exam, because the DEX platform is available. The centers are the 240 odd DEX centers are available. So we have launched this year as a pilot the MBA exams, the entrance exam for CAT. It was conducted live at our centers, at the DEX centers, and as I said, this paves the way for us to do the same thing for other exams also. One of the success areas has been the platform monetization, as I said earlier, going fine. Easy Apply is the application platform for the students. And this year, with the exception of CAT, which is the admission test for the IIMs, practically all other MBA entrance exams are on our platform, and we are hopefully we are able to get almost all the law school exams also on our platform. So here from something like 10,000 applications or 10,000 enrollments, application forms sold from a platform, we are likely to go to 40. We are around 14K, and this is likely to grow because the next 3 months is when the significant amount of application activity happens. Okay. So this is something which we are bullish on, and we hope to take it to the next level in the next financial year. Because from an MBA perspective, the season will be over in the next couple of months. From a BBA law, IPM, or the UG segment, the season will be on for the next 6 months. So that will start by and large from April and go up to July, August. And then the MBA season will happen again. So this is a segment which seems to be doing fairly well for us and should be a positive thing for us going forward. Arjun, back to you.
Thank you, GP. Nikhil, if I could request you now to provide an update on the MarTech business.
Yeah, thanks, Arjun. As you can see, that MarTech business has been showing a steady but a robust growth, both in terms of revenues as well as in terms of profitability. The growth in the international market has been much better than in the Indian market. There are some challenges in the Indian market from a consumer point of view. The international revenues have grown from 33 crores to about 41 crores in the corresponding 9-month period, while the Indian revenues have grown from about 78 crores to 81 crores. I think the critical aspect of this is that we have added some of an extremely blue chip customer accounts, not only in India but internationally. In India, we have added PwC, Himalaya Drugs, Zoho. Internationally, we have added Adobe, Autodesk, H2O, Xiamen Airlines as our customers. There are a couple of new customers which have been onboarded in the month of January, February, internationally, including Oriflame and a couple of others. So I think new customer onboarding is an extremely positive sign because new customer onboarding starts contribute. Though starts slowly, but once fully onboarded, accelerates the revenue accretion going forward. As I had shared in the last call, the slight dip or muted revenue growth in India was predominantly driven by two significant customers. AWS and Air India. Air India actually totally shut down its outreach and marketing operations post the air crash in Ahmedabad. Uh, the good thing is that they have restarted engaging in the market, not only in India but internationally, and we expect them to start scaling up in the coming financial year over the next 12 months. AWS was again an internal structural adjustment because they collapsed a few of their different business divisions into one. So, for a period of about 2 quarters, businesses were unsure how to go about it. Things have stabilized on that account, and I think we are currently in the process of executing a large ticket event in this quarter in India in the next 2 weeks. And I think the turbulence in some of these large ticket accounts which had hit us in H1 has stabilized, and I think should see a faster revenue accretion going forward. One specific update on business is that we had started slowly working around creating a CXO community. We have started engaging on customer driven CXO community engagements over the last 60 to 90 days, and we have seen an extremely positive traction. We have done these kind of engagements successfully driven predominantly with Google, PwC, and to some extent by Dell. I think as we start expanding this engagement across a larger set of customers with a larger set of CXO communities, not just CMOs, but CHROs, CFOs, the CIOs and CTOs, I think that will establish a much stronger foothold for us to be able to accrue revenue from different divisions of business. As of now, 99% of our revenues come in predominantly from the CMOs, CIOs, and the CTOs, and we are working towards diversifying that basket going forward. Utsav, which is our social events and business arm catering to luxury weddings and social events. We started off about 9 months ago. We have accrued a revenue of about 6 crores, having executed just about 4 events. As you would know, this is a segment where the business incubation to closure cycles are pretty long, take about 3 to 6 months from the initial engagement to the final closure of business, and the event execution could again be 6 to 9 months down the line. So I think currently, as I speak, we are sitting on a reasonable, strong wedding pipeline, but large chunk of it is execution and delivery in FY27. I think as we report even the next couple of quarters, we may not have too many events. Most of the events execution for them are in Q2, Q3, and beyond. But we are sitting on an extremely healthy pipeline for the next fiscal. Arjun?
Thank you, Nikhil. Satya, if I could now request you to come in and provide an update on the My Sathi initiative.
Yeah, sure, Arjun. Hope I'm audible.
Yes.
We go to the next slide, Arjun. Yeah, okay. Hi, good afternoon, everybody. As you know, one of the things that we were looking at when we acquired NSCIT and rebranded it as DexIT Global was also to search for not just addition of business impact at the overall group level, but some significant value creating disruptive initiatives. And the one that we picked up and focused and we have executed it over the 9 months is what is something that I'm going to cover here in the next 5 minutes. We have the links and the releases, etc., everything on the website. You could take a look at it. I will quickly cover this. SATI stands for Scholastic Aptitude Test for Higher Ed Institutions, and as a test prep company, and also one who has seen assessments as Dexity for the last 2 decades, one opportunity that we have picked up is, can we create and own an assessment IP platform of our own, wherein the core strengths of CL as well as Dexity, they are deployed in the marketplace. So what SATI does is to look at 4 21st century skills which have been approved both at the NEP, going all the way to the United Nations, as the important skills to be evaluated for youngsters as they get into higher education or they get into the workplace. Because of the NEP 2020, this has acquired a lot of importance, and every university is trying to build their curriculum in and around it. So mysati.org has been launched. The first MVP is to help students in 11th and 12th take this exam, and then the universities will begin accepting this as their score for admissions, which means a university could be using an IIT JEE as a score, it could be using a CUET as a score or an SAT as a score, and it also similarly will use MySATI scores. That's the starting point. The 2 important innovations in this, and it's very important for us to appreciate this, as it could be a very game-changing innovation in the Indian higher education and the talent pipeline landscape. One is, this is India's first on-demand examination, which means unlike an IIT JEE or a CUET, which happens in a particular window of 1 day or 7 days, this is an on-demand exam. Today, you can go to mysati.org. You can, as a student, pay 500 rupees, choose a city and a location of Dexity, pick a date and time, and take the exam. That's number 1. Number 2 is, this also is the first computer adaptive test in our country, unlike other examinations. So deploying AI, while GP covered a couple of places where we are deploying AI in terms of academic support, adaptive learning, etc. Here the adaptive testing is also going to deploy AI in a very real sense. So we are starting with the middle part of this, what you are seeing on the screen, SATI 4C. 4C standing for creativity, collaboration, communication, and critical thinking. There is a precursor to it called SATI Now, which will be done in grades 8, 9th, and 10th as a preparation. Now stands for National Aptitude Olympiad. That also will test the 4Cs. And we are also looking at SATI Exit exam, which is going to be represented as SATI X, which a student takes while he is in the final year or the penultimate year, and the corporations, organizations, recruiters, they will accept that score. Let's move ahead, Arjun. We worked on it. The work began as early as April. The product development, the platform, everything is in place. On the 23rd of January, we formally launched the platform. You can see a few photographs where eminent people from some IITs, IIMs, chancellors, they're all there. And the universities, think of it as a SaaS model where universities, they get empaneled on an yearly subscription model. And as you know, we have 55,000 colleges. We've got government universities, private universities. So there is the demand for talent. They come onto the platform and they get the MySATI scores. Schools also will get a MySATI zone. They will come onto the platform, and the students pay just 500 rupees. That's a massive price disruption also that we are doing, and we are able to do that because the distribution, the technology is already in place of NSEIT, which we are leveraging, and the ability to design an adaptive test along these 4Cs. That capability is there with us. We further added more competencies both in India and abroad. All those details are available in a full-length videos that you can find on YouTube, as well as the link is on our investor zone. That's the assessment part. At the same time, the revenue monetization for MySathi would also come from the easy apply that GP was talking about. We've done 14,000 applications this year already without the MySathi, because over 125 universities work with one of our divisions, CL Media, for their market engagement, for their application, etc. Now, when the universities come on MySathi, we believe that's going to get a multiplier effect. And in application form, the benefits are the student gets application forms at one place, whereas we get about 70% of the revenue from the application forms that go to the university. This is a very standard practice. That's a second monetization opportunity, which means, and we also answered this in a detailed FAQs that will go live on the investor zone. You can take a look at it, and we are happy to respond to more questions. Number 3 is, as you know, GRE, GMAT, SAT, they also have the official practice tests and official learning zone. That is also something that the practice tests are already live. The learning zone will be live in the next 45 days. And that's the other monetization opportunity, which means for every student who comes and takes MySathi at 500 rupees, if he applies to 4 institutions using Easy Apply on our platform, and if he or she takes a couple of practice tests and learning zones, the monetization opportunity could move from 500 rupees per student to about 6,000 to 8,000 rupees per student. Let's move ahead. The good news is that even before we have rolled it out, we have 18 empaneled universities, about 900 courses, and about 45,000 seats that are going to be filled through MySathi. And if you look at the quality of institutions, IIT Madras Zanzibar campus, IIM Mumbai for their exec-ed program, BITS Pilani for their diagnostic and development programs for students inside the campus. These are some of the good universities. If you look down south, Geetam is a well-known university in the twin states of Andhra and Telangana. So the good quality institutions, 18 of them are already onboarded, and we are in discussions with 75 more. And the idea is, how do we get Indian universities? We are in conversations with a consortium of 9 universities from UAE. We are in conversations with through Australian Embassy with a bunch of Australian universities which are setting up campuses in India, and 6 of them have signed up with us for the MySathi CL Media outreach program already. So it is looking like something which could be very disruptive, very transformational, and we also believe that once we build these deep institutional relationships with universities, it's going to benefit all the 3 entities in the group, which is DexIT, for instance, is already doing the entrance examinations for Ashoka University or Geetam or IIM Bangalore distance learning program. So the moment we are able to then go and solve one problem for any university with a relationship, it could be private or public, then the other services could come around, and the utilization, use of AI, use of distribution of both CL and DexIT, and the availability of these assets to be sweated with a new idea called MySathi looks a very, very promising initiative, which has started entirely after the acquisition, and we are looking forward to executing this and scaling this over the next 2 to 3 years. I'll take the rest of the questions where it is relevant. Thank you. Back to you, Archit.
Thanks so much, Satya. If you'll just give me a few minutes, I'll just go through the questions that have come. We will now take up your questions over the next 15 to 20 minutes.
Sure.
Thank you. First question, GP, if you'd like to take this, is the CUET business not picking up? This is from Gunit Singh.
Okay, Gunit. CUT business is there in terms of volumes and not in terms of value. The issue with CUT has been the way it has been conducted in the last 3-4 years. It has lost significant amount of credibility among the students, and they don't look at it seriously. So while they prepare for it, they go for the shorter versions or the, let's say, the lower price variants, and that is what we have been focusing on now. So CUT is unlikely to become a big growth driver for us. Okay. But yes, the numbers would be there. So it will suffer from a pricing, and hence the overall value that we'll be able to derive from the product is not going to be as high as we anticipated initially when it was launched.
Thanks, GP. There's some follow-up questions also from Gunit, so I'll just take all of them at one shot. He's asked about our standalone business making losses. Gunit, the loan that we have taken for the DEX acquisition, the 210 crore loan that I spoke about earlier, is on the books of the parent entity. And when you look at the standalone numbers, the interest cost that comes from that loan features on the books of that entity. And as I spoke about earlier, there's the interest cost, and then there's the IND-AS impact of the capital reduction scheme for the redeemable preference shares that exist from the NSE regime days, which make the losses look more extreme than they are. Specifically, Gunit has also asked about, is there seasonality in the DEX business? Yes, Gunit, just to explain the DEX business again very briefly, in terms of the way it is structured, there are two lines of where the business runs. There's the certification and accreditation business, which is more like an annuity business. It's what Satya was speaking about as the on-demand side of our business. For example, a client of ours, IRDA, which is the Insurance Regulatory Authority, you can book a slot and come and do an exam. That business runs right throughout the year, 365 days of the year. Similarly, we have other clients who also fall under the same category, who use our 237 center infrastructure for on-demand exams. So IRDA, ICAI, UIDI, NISM, NCFM, all these exams run right through the year, and there is no seasonality involved. This is very much like an annuity business. The second part of our business is recruitment and entrance exams, which works on when is the exam happening. So the exam could happen over a 1-day period, it could happen over a 7-day period, it could happen over a 30-day period, and the revenue recognition would be accordingly in line with meeting the performance obligations as per IND-AS 115. So there is an element of seasonality that hits the business, and typically we are a little H1 heavy as compared to H2, but there is also the matter of the business not necessarily being aligned with financial quarters per se. So you bid for contracts, you go through the RFP mode, you go through the tender mode, and when so it's typically works on an order book system where you have 6 to 8 months of time lag between when you start the process of applying for business to when the business actually tends to fructify. So what we report from a financial numbers perspective is what gets translated into revenue, but we also have a pipeline across both the accreditation and certification business, and across the recruitment and entrance exam business, which would fructify in Q4, in Q1 of next year, in Q2 of next year, and so on. So I hope that gives you a little bit of understanding about how the DEX business moves and why EBITDA it's not a Q1, Q2, Q3, Q4 consistent line of business that happens across certification and accreditation, but not across recruitment and examination. Satya, there's a question on the fundraise and the loan from promoters. Would you like to take that up?
Yeah, sure, Arjun.
Yeah.
So, as all of you know, in the context of acquisition of DexIT Global, it's a wonderful asset, and our experience of now having run it for 4 quarters with the top line growing and the EBITDA, which is in the 45-50 crore range, it looks very solid in terms of growth over the next 3 years. And we had taken loan for that acquisition in addition to partially funding it from our internal accruals or free cash that we had. Needless to say, we stretched ourselves a little bit, and we are absolutely convinced about the quality of the asset, the quality of the acquisition, and the medium term to long term benefits of this, both BAUs independently and together synergistically. However, there is a short term little bit of a cash stress situation, which is acute and short term. And it is in that context that we as a board have looked at raising a small amount of capital, while our much clearly articulated goal of becoming entirely deleveraged in 24 to 36 months that stands. And we are in this process, in the first step, planning to raise a small amount. We have taken an approval of up to 50 crores. We may not go all the way. And while that process will take, as you know, anywhere between 6 to 8, 10 weeks, we as core promoters, we are extending some loan at terms that are determined at an arm's length, approved by the good governance formulae of neither more nor less with respect to other loans. Once the road is clear in 4 to 6 weeks' time, the same advance what we are giving now, that'll become our investment, and we are fully convinced about this quality of investment, and that's our expression of confidence. However, we are extending it as a quick advance to make sure that day-to-day business does not have to feel more stress than what is needed. So that is the context. I would want to reassure all of you that the quality of growth, the synergies of both DexIT and CL, and the actual numbers that are played out even in the last 4 quarters, that gives us enough confidence to tell you that this is something that we are fully convinced about, and we will look at this as a small effort in the overall path to becoming debt free over the next 24 months. Thank you.
Thanks, Satya. There's a follow-up question on how do we plan to raise the 50 crores, and do we plan to raise it at the parent level or in one of the subsidiaries?
Yeah, sure. Thanks, Arjun. I think it is appropriate for me to mention that, as we have mentioned even earlier, we have inbound conversations and also 1 or 2 conversations that are happening with both financial and strategic investors. Some of them are interested in the parent entity. A couple of them are interested only in DEX. At the boards of both the companies and the investment subcommittees of the board. We are engaged, we are examining those. Those conversations could take anywhere between 4 to 7, 8 months. But I think in calendar year 2026, we see that happening. So we are very mindful as an institution, as a board, that the best option of raising money in the parent vehicle at appropriate valuations, or the 100% sub Dexity, we will make the right decision at an appropriate stage. Some of these are very interesting, very exciting conversations. It is not appropriate for me to make a mention of those prematurely. And that's what gives us the confidence, notwithstanding certain other short-term signals in the market, etc., that we are very confident about how it's going to pan out. The only place which GP covered adequately is where we are also beginning, or we are also working upon reinvention, some initiatives that have to pay back, is the test prep structural disturbance that is there. That is something that we need to focus on. The rest three engines, whether it is Dexity, CL Media, or Keystone, those are doing very well, and we are hoping or working towards MySathi emerging as a very, very valuable strategic engine for at least 2 out of these 3, if not 3 out of these 3 in the next 1 year. Back to you, Arjun.
Thanks, Satya. There's a question from Manoj Bagadia, one of our long-time investors. What is the tenure of the 210 crore loan and repayment schedule and rate of interest? Manoj, it's a 6-year loan with a rate of interest of 11.9% and a structured repayment, which is loaded towards the back end of the final 3 years, with the first 3 years being a little bit lighter. I'll take up some more business questions, and then I'll come back to a few more of the finance questions in between. Gautam, if you'd like to take up this question, it's from Rahul Bansali, again, one of our regular and long-term investors. With the EdTech business potentially going through structural risks, are we looking to do any strategic partnerships going forward?
See, strategic partnerships, that discussion keeps happening on and off with different players. I would not take name of any, and even at this point of time, we are in discussions with a couple of players. But it has to make sense for both of us. And since nothing of the sort has happened, there's nothing on the let's say on the paper right now. But these discussions keep on happening, and any good opportunity we get, we always willing to look at things because we think we have great products. We have a great network, and other players who want to ride on our network can always come in, provided it works for both of us. So yes, we are open to it, but nothing concrete at this point of time while discussions are on.
Thanks, GP. Nikhil, there's a question on the MarTech business. How will the mix of revenues between international and domestic pan out over the long term? And how do we scale the international business going forward? Also, if you could share some specifics on how Versa is performing in North America. This is a question from Henil. Nikhil, I can't hear you if you're speaking. You're not audible.
Are you muted, Nikhil?
Yeah, I muted myself. So as I said, the international growth had been much faster over the last 4 to 6 quarters, and we expect that growth rate to continue to be faster as compared to the Indian market. Our growths in Indonesia, Singapore, US, they're growing at a pretty steady rate. And as of now, international accounts for roughly around 35% of the total revenues. I think over the next 3 to 4 years, we expect international revenues to become almost equal to the domestic revenues. Regarding your question of Versa, I think we have started deploying it. We are currently doing a pilot for 2 customers in the US. We're also doing a pilot for Salesforce, as I had shared earlier. Uh, that is predominantly for the North American market, but has been invoiced from APAC because of Salesforce internal constraints, because we are not yet registered as an empanel vendor there. While we are registered in APAC, we are in the process of getting empaneled at Salesforce North America. So I think the initial success stories of Versa are beginning to reflect, but this is a journey where the acceptance from pilot to a large scale commercial deployment takes between 2 to 4 quarters. And I think we will go through that cycle before expecting a rapid ramp up of this effort.
Thanks, Nikhil. While I have you, there are also some follow-up questions on Utsav.
Sure.
What is the cash burn in the Utsav business, and will profitability drag Utsav and as a result the company over the next 6 quarters? And how do we leverage the contribution of Sanjeev Kapoor and Samir Puri specifically in terms of leveraging it across Utsav?
Okay, let me answer that in 2 parts. Uh, Utsav is currently an extremely lean and mean team of just 6 to 7 people, and the predominant cash burn is in terms of people investment, technology, and product investments, which I think we have done substantial part in year one. We are expecting the total cash investment required for maintaining overheads and keep rolling up and expanding business to be in the range of 1.5 crores in the next 12 to 18 months. As the business scales up with each successful project closure, there is a cash surplus which is getting generated. And I think by the end of the next 12 months, we should hit the cash break even situation and move forward from there to a cash positive situation. So that I hope that answers that query.
Uh,
Regarding Sanjeev Kapoor and Samir Puri, I think the Sanjeev Kapoor agreements, once they were approved by the board, will now get executed. While Mr. Sanjeev Kapoor has been from behind the scenes helping us in terms of business development, referring clients. I think with the formalization of the association now, we expect a significantly enhanced leverage and participation from him, and that should result in an accelerated uh, business growth, not just in Utsav. We're also expecting some positive rub-off of that association even in the Keystone corporate business over the next maybe 12 months. It may not happen in the next 2 quarters, but I think that positive rub-off should start reflecting in a detailed and a more intense engagement with a certain segment of clients in which Mr. Sanjeev Kapoor has an extremely positive reputation.
Thanks, Nikhil. I've got a ton of finance-related questions, so I'll just answer them all very quickly, and then Gautam, I'll come back to you for some more EdTech questions. One of the questions is, what is the receivable cycle in the Dexit business? It's typically 60 to 75 days. There's a question on, is there any deposit to be given for GST demands? Typically, a 10% deposit is required to contest any GST demand, unless it is quashed through a writ petition. If you are specifically referring to the update that we provided in this quarter on the CL Media, erstwhile CL Media related demands, the significant portion of that we are hoping to quash through a writ petition, for which we have taken a legal opinion from Lakshmi Kumar and Sridharan. They are one of the top legal groups in the country for indirect taxes, and they strongly believe we have an excellent case on that point. For anything which requires us going to the appellate tribunal, a 10% deposit is required. There's also a question on what non-core assets do we have and how much can we monetize that. We have a land parcel in Raipur for a school we used to run, and we have a few buildings available in Pune, Delhi, and Mumbai. The total worth of those is about between 25 to 30 crores. We continue to look for buyers for those, and as and when we have something relevant to report on that front, we will definitely share it with you as an investor group. On the EdTech business, GP, there are a few questions in terms of what is the scalability possible for the BBA and IPM business overall, and what is the traction in the publishing business, especially on the B2B side, which we had spoken about earlier. Also, which verticals under EdTech will drive the recovery, and given that we will be under pressure for the next 2 to 3 quarters, how do we see it moving forward? GP?
Yeah, I'm sorry, Arjun, I was on mute. Quite a few questions together. I'll try to take all of them. But if I miss out, I think you'll have to repeat the questions. Okay.
Sure.
So first of all, when you look at how do we move forward, which are the sectors which are going to show the recovery path? See, this is a structural change, so it is going to impact all segments. Some segments it will impact more, some it will less. What I mean by that is when you look at the school segment, school to college, or the UG segment, BB, IPM law, these are segments which are by and large paid for by the parents, and parents are little less hesitant in terms of paying extra money from an education perspective. However, when you look at the graduate segment or the college to further study segment, whether it is GMAT, GRE, or it is for study abroad, or it is MBA, these are the segments for which most of the time the student himself or herself is paying. And there they are a little more circumspect and they try to conserve money. Okay. So if you ask me what is going to be the way forward, the way we look at it, the way forward from a recovery point of view is keep your focus on volumes when it comes to the graduate segments. Yes, you have to keep innovating on the product, keep adding value to the product. And as I said earlier, make sure that you are available in all formats, and there is a interoperability, which means a student should be able to move from online to offline and vice versa. And products like test series and small products which are not the complete program, but one segment, only maths, only English, only reasoning, only law kind of products are the ones which are going to drive the recovery. Obviously, that means we'll have to go for higher volumes. While we have been able to grow our volumes by and large, but it will mean higher volumes, but at a lower price. So the volume growth will have to be significantly higher than what we have seen so far. Okay. BBA IPM is likely to be a growth area for the simple reason post-graduation is optional, graduation is compulsory. And in the current scenario, a large number of IIMs and IITs and the other premier institutes are launching UG programs. And that is what could be a good driver. And that is what could be a good replacement from a MBA perspective. So whatever is the fall in the revenue from MBA, it is possible that you'll be able to pick it up from a BBA IPM kind of products. Okay. Arjun, can you just repeat the remaining questions?
GP, I think you've covered everything except for the publishing business.
Okay. Publishing business, it's steady. It is still doing what it is supposed to, which means the growth is there, the normal growth is there. We still have a few author-backed titles as well as a few authorless or GKP titles where only the company name is there. So steady business, no significant growth, but no decline also, and the steady 10% odd growth kind of a thing is happening continuously. We have consciously cut down on a few retailers and distributors, keeping in mind the viability, which means the payment based on the payment cycle that the distributors or retailers have for us. We keep on turning them around. Yes, Arjun, back to you.
Thanks, GP. There's a question on what comes under allocated costs in our segment reporting. That is largely corporate expenses, which are not necessarily relevant to any specific business, which includes the leadership team, the secretarial team, a few members of the finance team, and any legal related costs and of that nature. I hope that addresses your question over there. I'm just running through the question list to see in case I've missed anything critical. There's a question on how much of the depreciation of in the DEX business comes from leases. We have about 9 crores of depreciation from a 9-month perspective in the DEX business, of which about 8 crores comes from the right of use assets, which is again an Ind AS requirement. I think that addresses most questions. I'm just double checking the list to see in case I missed anything. There's a question on whether we are likely to need to discontinue any more businesses to compete for projects in the DEX business. No, there are no such plans as of now. Whatever needed to be done, we took those proactive decisions last year in terms of eliminating any potential for there to be any conflict of interest. There's a question on, can we work with the likes of ICAI, ICSI, and so on for the DEX business? Yes, we are already working with ICAI. We will do between 20 to 25 crores of business with them this year. What we do with them is we try to help them improve their pass percentage for students who write the CA final exams by introducing 4 modular tests which students take at our DEX locations. These are open book exams which are designed to, and they've made it mandatory to clear these 4 modules to be able to appear for the final CA exam. We are in talks with ICAI to improve our product range and our product offering with them. Our platform, of course, as you're aware, is exceptionally robust, and we can add a lot more modules to the same. So conversations with ICAI to do that are on. We're also in talks with them whether the foundation exam can be moved to a CBT type modular exam, and then can be done almost on demand, like some of the other exams that we're doing with ICAI and with IRDA. So those conversations are ongoing, but they take a little bit of time to fructify. We also remain engaged with ICSI specifically in terms of looking at modules that we can do with them. So some of these projects are ongoing, as are a lot of conversations, as Satya mentioned, with universities, which, as being part of the CL group, we work with a lot of university partners. So the DEX team is working on expanding those relationships and also looking to add more corporate clients to help corporates with their L&D and training goals. So you'll hear a lot more news from us over the coming 4 quarters on what DEX is doing and how we hope to expand that business going forward. Satya, would you like to come in?
That's okay, Arjun. I think you've covered it well.
Yeah, thanks. So if there are no more questions, it's also 4:30. We'll wrap up this session here. If I may, I'm just going to put the last slide back on the screen. That includes my contact details and my colleague Amit. Feel free to get in touch with us or with members of our IR team, Ajay or Muthu, for any questions that you have. If you need a deep dive on any of the numbers, book a time slot with us, and we'll be happy to answer your questions in detail. We'll be back to interact with you with our Q4 numbers later this year. Thank you, everyone, and have a good day.
Thank you, Arjun. Thank you, everybody.